Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show. Hello, listeners. We hope you're having a stellar beginning to 2021. This is Adam, and I can tell you that Kevin and I are excited to be 1 year closer to financial freedom and the great escape from the rat race. We hope you feel the same way. If you're a regular listener, you know we invest in real estate, but we also like to educate ourselves and our listeners on many investing strategies and investment types. It's always good to understand the many options out there and how successful people in their field think. We believe there are lessons to be learned from others who do different things. With that said, we're excited to have an expert in currency investing on the show today. On this episode of Tech Guys Who Invest, we talked to Etienne Crete about Forex trading. Forex, or foreign exchange trading, involves trading currencies. Etienne has achieved financial independence through Forex trading, and he shares insights with us about this type of investing. Etienne Crete is a swing trader who helps aspiring Forex traders develop a trading method that works for them so they can produce income, allowing them to live with more freedom. From Montreal, Canada, Etienne escaped the rat race of a day job through investing, and now he invests professionally and travels the world. We hope you enjoy this show and learn something new that helps you be a better investor. This episode of Tech Guys Who Invest is brought to you by Dreamstone Investments. Dreamstone is a multifamily real estate operator based in Atlanta, Georgia, and Tampa, Florida. Dreamstone specializes in finding and acquiring off-market value-add deals across the southeastern part of the U.S. Dreamstone creates immense value by ensuring the tenants are treated like residents and by adding the Dreamstone touch to each of our communities. To schedule a call to find out more about their current offerings and to see how you can partner with them, please send an email to info@dreamstoneinvest.com. You can also check out their website at dreamstoneinvest.com.
Welcome, everybody, to another episode of the Tech Guys Who Invest podcast. Now, as you know, Adam and I are real estate investors, but we love to educate ourselves and therefore educate you, our listeners, on different ways that you can invest your money, whether that be in stocks or bonds or whatever. And today we have Etienne Crete to talk about trading and Forex trading. So welcome, Etienne.
Thank you. My pleasure to be here. Of course, looking forward to the interview.
Yeah, awesome. So, Etienne, let's start off with what it is you love about trading. Like, why do you trade? What is it that you really love about it?
Yeah, I began trading in 2013 out of a pure interest for trading the markets, see how I could be able to make money in a different manner as opposed to a normal job. And that's kind of how I got started. Then I kind of like really fell in love with, I guess, the charts, the idea that you can make money from home as well. And also the fact that it's kind of like, it's just a nice craft. Like, you can look at the chart, you have to be able to not only understand yourself, but like master yourself, but master the market as well, understand the market as well. That's what fascinates me all the time. So it's kind of what keeps me going.
Cool. Awesome. Well, for our listeners who aren't familiar with trading or how it works at all, like I don't really know how it works. Can you help break that down for us?
Sure. So the Forex part or the trading part or both?
Both.
Okay, awesome. So basically what I've been trading since I began trading is the Forex market. And so Forex are basically currencies. So instead of trading stocks or futures or different things, you trade basically currency pairs. And currency pairs, they work in relation to each other. So you cannot just trade only one, you trade like a mix of both. You trade a pair, basically. And so that's what I've been doing for the past few years. And currency pairs, basically like stocks, are influenced by different things, but mostly what happens in different countries. The import, the export, the employment rate, unemployment, these kind of things. And so you can trade those if you want with the different broker. And what I like about it when I begin trading is the fact that it's really easy to enter. Because like when you want to invest in stocks or even like real estate or different things like you guys do, you got to have there's like a barrier to entry, right? So you need more capital, you need something to be able to invest with, as opposed to Forex. Well, like a currency pair is worth like $1 or $2. So you can start as low as that if you want, or you can go, of course, bigger, which is what I recommend to do over time, of course. But the bar to entry is really low. So you can start with pretty much anything you have. and jump right in, which is really good to learn. But now what I realize also is the fact that Forex is open all the time, 24 hours a day, 5 days a week. So even if you're like in Bangkok and anywhere you want to be, then you can still trade the same hours. In your day, you don't have to be awake at night to trade that. So that's the basics of it. And then you can trade based on, of course, fundamental, which is like the economy overall, what happens in the country, like I said, the unemployment rate, the export, import, these kinds of things. Or you can trade based on technicals, like in stocks as well. Or you look at charts, you analyze like chart patterns, different movement in the chart, different commonalities that happen all the time. And that's kind of what I focus on. So that's the basic of it.
Okay, so when it comes to real estate investing, when we say, hey, focus on this particular city, you kind of read articles, you talk to people that are in that space, see what businesses are coming in. From a foreign exchange perspective, do you look up like how a country's performing, the news globally? What are you looking at?
Yeah, so you could do that. That's like the fundamental approach to things. You look at fundamentals, which are the kind of the data, the economic data, the country. You talk to people, you do research. Some people like that. I personally don't really like it. I'm more like a hands-on person, like more down to earth. I like technicals. These are things in the chart you look at. You see how price behave. Some people say that, well, whatever happens on a fundamental level, like economy and everything, it's going to be reflected on the chart anyway. So you will see it on the chart when you look at the chart. So in that manner, you could say, well, you look at the chart patterns, different things that can happen on the chart. And based on that, you can take trades or maybe get out or whatever in the market. So you could use a mix of both. You could use only one. It doesn't matter. Whatever works with you, it's kind of like your personality. And you just adapt to that and focus on the one you prefer.
Interesting. So, Etienne, when you say you trade in pairs, for someone who has never done this before and it's brand new to them, what does that mean at a real high basic level? How does that work? What do you mean when you say it trades in pairs?
Yeah. So when you have a currency, right, and then you want to do something with it, let's say you go travel or something, you have to change it to a different currency. So the currency by itself isn't worth anything. But if you change it for something else, for another currency, then that's where it's worth something, right?
Okay.
So now, what is it worth compared to this other currency? Let's say if you have like US dollars, what is that worth compared to the Thai baht or compared to the euro? And that's the thing that you can change. And then when one country goes well, the other stay the same, then the pair is going to go up, right? If one country goes bad, the other goes up, of course, it's going to change the pair. So that's kind of the things we look at. And so it's dependent on the economy of the currency you trade, but also the one with the pair as well.
Okay,
So
that makes sense. Yeah, that's helpful. So I'm curious, is there some sort of a timing component to this? It feels like that might be a factor where you're ready to sort of trade a US dollar for something else, and then after some period of time you might trade that for something else. And is that kind of how you think about this?
Yeah, so there's no period to keep your trades. You can open, close them whenever you want. Unlike option, it's like whenever you want to do it. You can change, close, you can modify your trades. That's totally fine. So what is good to do for me is I look at pairs that are specific zones. So let's say this week or this pair this week is the pound USD is at a good zone to trade. So I'll trade that pair more. Next week maybe it's gonna be different. This pair is like out of its zone. Now the other one, like your USD is the zone now, or whatever pair. So it kind of varies like that. You could do that, or you can look at trends. Some people like to buy or sell trends. So strong trends, strong uptrends, strong downtrends. You look at the pairs in the trend that week, and that's going to vary week by week. So you can just focus on those better to be able to catch higher probability trades.
Interesting. So when it comes to trading, what would you say the risks are of being a trader?
Well, the risk is, of course, your capital, right? So if you're going to take trades, buy and sell things, you're going to have to risk your capital for sure. So that's why we recommend people to kind of start small for sure. Start with a smaller account balance. And then as they move and become better, they can increase that over time. Of course, the other risk that I see on a bigger perspective is the fact that as a trader, you don't have like always this constant cash flow. It's really hard to like have this constant gain or win every month. It's going to vary week by week, month by month, and you have to be able to adapt to that. You have to be okay with that. I think that those are the biggest risk. You have to have some safety nets, of course, where things go wrong 1 month, or because you can have losing months too, right? That's totally normal. Some traders have losing years, losing months. That's you have to be able to adapt to it, and you have to be able to stay above the water with that.
Okay. Now, when it comes to protecting risk, as real estate investors. For example, I invest in mortgages. My investment is protected by the property that the mortgage is on. So, a single family home, I can foreclose on the borrower. Adam, as a multifamily investor, has the ability for kind of economies of scale. The doors he has, number of tenants, right? If one tenant out of 100 leaves, they still have 99 tenants that are paying rent, kind of thing. So from a trading perspective, how do you protect yourself from the risks that you just mentioned?
So that's one thing you have to be careful about, because you don't really have any kind of backup or anything you can rely on when things go wrong. One thing I could say is trading in the market are kind of based on probabilities as well. So even if you have like maybe 10 trades open, then probably if they're not correlated, if they're not all the same currency pair or all the same kind of similar pairs, some of them are going to be winners based on probabilities. So that's one thing, which is not a big factor, like a big risk protection, but that's one thing. The other thing is the fact that, well, you can manage your exposure or your lot size when you enter a trade. So you can enter a trade with that many units, but that could be risky. So you can something big. So for most people, they shouldn't be entering the market with more than 1% of their account in risk. And that's even pushing it to the higher side. People risk a lot less than that. So that would be the best thing to do. So you reduce your size, make sure you trade things that are not correlated. You can also diversify with different markets. For example, I trade Forex for sure, yeah, but I also have investments in other things. So even if that goes not so well 1 month, then the investment are going to kind of carry on and help me get some monthly returns anyway.
Nice. Yeah, I like how you have kind of a strategy there for your risk profile. That's great to hear. And Etienne, I know you do some education and you help people learn who are interested in this. What are some of the misconceptions of trading?
The first one is the get rich quick or the get rich without effort. So when you get into trading, even for myself when I began, it's like, oh, it's easy. You just sit at home, take trades in the day, and then that's it. You're going to make money. But it's much more than that, of course. You got to be able to, first of all, I guess in the beginning is manage yourself. So there's emotions coming in when you trade. There's like the money aspect there. So if your mindset is not strong, then it's not going to work at all. So that's the first thing. The other thing is the fact that you need to have the perfect strategy. Like one of the things that people search for the most are, of course, strategies.
Right.
Like when to buy, when to sell, these kind of things. And that's good, but people spend a lot of time kind of strategy jumping. They go with one strategy 1 week, and they say, oh, it doesn't work because they have a few losing trades, and they go to the other one. And most strategies are going to work about like 50% of the time, 40% of the time sometimes. And so that's kind of what you have to expect. Most traders lose more often, but because their risk reward is good, they tend to make more of the time. So you got to be willing to lose a lot of time, being a losing trader all the time almost, and have some trades winning, but in the end, you make some profit. If that makes sense.
Interesting.
I like the way you're breaking that down and you're being transparent with, hey, look, you're going to lose. There's no ifs, ands, or buts about it. But with that losing, eventually you'll strike that windfall. So thank you for sharing that. One question, this is probably my ignorance to trading, but how would trading be different than, say, I guess, trying to time the market?
It's pretty much the same. The only thing with trying to time the market is the fact that you don't have a strategy behind it. So the purpose of a strategy is something you do all the time. So it could be
discipline.
It could be like a surgeon, right? When they do a surgery, they know what steps to go through, right? They know what to do. So when you trade, you do the same thing. And the thing is, if you do random things in the market, then you're going to get random results. But if you do something all the time the same, then chances are that over time you can find out what's the probability of winning, and that's going to kind of repeat itself over time. So it's much more measurable. And you can also change it. So if it doesn't work one way, you can change it the other way. And it's going to work better. So that's the purpose of either a process or a strategy, we could call it.
So, Etienne, do you consider trading investing, or do you look at it more as like a more of just a
job, maybe?
Yeah, job or income producing activity? How do you look at that?
So it's kind of both yes and no. So it's kind of investing in the sense that trading is, I think for me, not for cash flow, because like you could expect cash flow, but then the results won't be consistent out of it. So it's much better to, you still trade every day, but it's like to build it over time to a bigger amount. That's kind of how I see it. But then at the same time, it's like, it's not investing because you have to be there all the time. You have to manage your trades every day. You have to take trades every day. You could be like more hands off if you want, but in all, you have to be there every day to manage your trades. And the results are going to be much more dependent on the market that day. So I like to have both, some investing long term, some more short term trading, and kind of combine both for the best results.
Nice. I like that answer a lot. I'm just curious too, if there are pure investing things you do also that are just kind of part of your whole plan. And this is one thing that you do.
Yeah.
Yeah.
So every month, what I do is I take part of the profit and I split it. I would like invest some, put some back in my account, keep in my account, of course, for to be able to grow the account because that's important. But then part of it goes to investing, which is like long term. I don't look at it at all. It's that there's growing over time, and so I just do that all the time. Yeah.
Nice.
Every month.
Love it. That diversification. And that's generally, from what I've read, what the experts say is the best way to protect yourself as best you can,
Yeah.
right? Right.
Yeah.
Every investment has risk, but diversification over time tends to win in the long run for protecting and even making a profit. When it comes to tax considerations, what are some things that you think about as a Forex trader or a trader in general? Like with real estate, you can claim depreciations, or your CPA would, as your property depreciates. How does it work from, and I know that you're not a CPA, but how does it work from like a Forex standpoint? What are things that should traders consider?
Yeah. So again, this depends on which country you're in. So for example, here in Thailand, it's much different than Canada or the US for sure. But in general, what I've seen in Canada and the US, the fact that you could claim it as capital gains because it's like investing, so it's capital gains overall. But if you do it full time, that might be more difficult to do. So you got to set up like a business where all your expenses would be, you can like use them to account for your profit as well, and so you can claim expenses that way. That's one way to do it. As far as this goes, then it all depends if you do it full time or part time or what else you do. But it's pretty much the same as investing in real estate. If you make it a business, basically.
And another thing real estate investors often do is, and we try and do this as much as possible, honestly, is use other people's money.
Yeah.
We love to use other people's money. Is that something you can do with trading as well?
Yeah. When I began talking about this a few years back, people thought I was crazy and everything because they thought trading with other people's money was insane and crazy. Now they have like a ton of prop firm popping up out there that basically offer you capital to trade for them. So definitely you can do it. You can have private investors. You can. That's what I did in the past. Is I would find investors. They would either give me some money to trade for them, or they would give me like a special account for them that I would trade, and I would get some returns for them. They were happy. So you can do that, or they have prop firms where they fund you, and every month they pay you like part of the profit. Of course, you can do that too. So there's a lot of ways to do it now.
Nice. Oh, that's cool that there are ways that you can do that. That's news to me. I didn't know. So I'm glad that we're conversing and I'm learning something new today. Now, one thing that I'm not sure that we've asked exactly, but what would you say the advantages of trading Forex versus, I don't know, different commodities or other types of stocks?
Yeah, the biggest thing is it's open 24 hours a day. So you can trade pretty much anytime you want. You could be at 2 a.m., whatever time zone you're in, and still trade. That's all good. And the other thing is like, yeah, you can be more kind of like risk averse in the sense that you can just take small positions, like really, really small if you want. Because there's some brokers, you can buy like 1 unit, which is like about $1 of currency. That's really low. So that's the biggest. The other thing is that most trading in Forex uses leverage. So with leverage, you're able to, even if you don't have much capital now, you're able to buy more stuff worth of currency. So that means that it's easier to get high position. Of course, it's a bad thing too, where you can like risk a lot and blow up your account. But at the same time, it's a good thing when you do it responsibly and take more trades and have a bigger kind of balance with that.
I'm curious. I've got kind of almost like a two-parter here. First of all, do you ever deal in things like gold or silver that may or may not really be considered a currency? Or is that just totally different?
So most brokers in Forex, they also offer like commodities and CFDs. So you can trade like, for example, coffee, you can trade cocoa, you can trade all these things, coin, oil if you want, gold as well. You can trade all those if you want. I don't trade them myself personally. They kind of are a different beast. They move differently. They move faster sometimes. It's kind of way different, but you could trade them as well if you want. Yeah.
Gotcha. Also, the second piece of that was, is there a way to kind of trade futures or things like that with this type of trading or no?
Well, you could get a different broker. Some brokers, they offer like everything like stocks, Forex, futures, all in one broker. But in general, most Forex, like typical Forex brokers, they don't offer futures.
cool.
Interesting. You're talking a bunch of technical stuff too. We should probably unpack a couple of those if we had, more time. Sure. And but we love at the high level that you're breaking down what it is, what it's like being a trader. And correct me if I'm wrong, but it sounds like similar to note investing, all you really need to trade is a computer and some internet connection to make it happen. Is that right?
Yeah, for sure. For the past few years, I've been traveling a lot. So the only thing I had to be able to trade was a computer, like a laptop, and that was it. Now I got a second monitor, but you don't really need that. But you could do it with like really simple, like just a laptop, if you want. And
that's awesome.
Internet for sure. Yeah.
Love that. And you also mentioned, Etienne, talking about failure, right? You mentioned that as a trader, you have to accept that there are most likely going to be more failures than profits. How do you reconcile that within your own mind, and how do you kind of help others figure out how to move past those failures?
I like to see losing trades as kind of like if you're in a business, like refunds, right? So now as a trader, you could be the CEO, and you got to think about, well, would the CEO of a company like, let's say Apple or something, would they look at all the refunds every day and be sad about it? And they probably wouldn't, right? So they look at the big picture view of things. And that's what I like to do is I like to kind of, I don't really look at my P&L all the time every day. I look at it on a monthly basis, or even like every week at least, or at most, to be able to kind of take decisions off that. Now, if you are in the day-to-day and you know what strategy works, you know what to do and what your plan is, there's no place for P&L or looking at your stats there, because it's gonna not do anything. You're gonna feel either bad about it or good about it.
Right.
If you feel good, you will take bad trades. If you feel bad, you will take more bad trades too. So it's not gonna help at all. So that's why taking the big picture view of things really helps to kind of look at everything overall. And from there, it's just about understanding the fact that you can always be better today than you were yesterday. So even if you had mistakes yesterday, you can find ways to make it better today. And it only takes for most people a few tweaks to be able to get profitable in trading when they're not. It's not like you have to reinvent everything. You have to start from scratch, just like change a few things, make things better, optimize things a bit, and you'll be getting better results. That's kind of how I see things overall.
So we understand that not only are you a successful trader, you teach other people and help other people do that at various levels. You're on shows like this and others, and that kind of indicates to us that you're more of a high performer and you really try to ascend and do your best. And I'm just curious, kind of from a mindset perspective, like what really motivates you and pushes you to achieve the way you are and to just kind of drive forward the way you do. How do you sort of think about some of that?
Well, I've always been like trying to be a high performer for sure. But the other thing is I also want to make sure I give back to other people and I have a positive impact on other people's life. So that's kind of why I help people and I teach people too. For me, trading all day wouldn't be really fulfilling. I still love trading and everything. It's still a good passion of mine, but I wouldn't see myself doing that every day, all the time, and just that would be like bad. Even if I were to travel and do things, it's just not fulfilling as much as helping people to do it. So that's kind of my goal behind it. And from there, it's just about, I want to be able to see other people getting the lifestyle that I have, just traveling and seeing the world and doing whatever they want to do in their free time and trading a few hours a day. And that's what kind of drives me. So if I can see more people do that, then I'm really happy, and it kind of drives me to do more. So it's
Love
just
it.
a cycle.
Yeah, it's awesome. I mean, Kevin and I feel very much the same way. It's one of the reasons we have the podcast, and it's so cool to hear that. It's great.
Fantastic. Well, Etienne, you mentioned that all you really need is a laptop and some internet to trade. But what would you say is a piece of technology that would make your life easier as a trader?
These days, I would say it's probably algos. And this is not like a hardware thing. It's more like a software thing in the background where you can code algos in trading. And so these algos, they can take trades for you if you want. That's kind of the biggest issue I had when I was traveling and trading, is that I couldn't always be there to take trades. So you would be like in the plane, you would be like on a boat somewhere, or you're just out and traveling and doing things. You cannot place trades then. And sometimes the best trades happen when you're not there, when you're away from the chart, and then the best trades come up and then you cannot take it. So one thing that I've done over the past few years is being able to code some algos. I have a team for that, of course, helping me to code them. But the thing is you code basically these algos taking trades for you with the same step I would take manually. There's some preparation to do manually before the algo goes on and everything, which I do in the morning. But then after, it's only the algo taking trades for me all the time during the day. So that saves a lot of time first, but also saves you a lot of kind of missed trades that you should take but cannot take as your way of doing something else. So no need to kind of watch a chart or doing things and being there all the time at your desk. So that really helps me.
Okay. And for our listeners who aren't familiar with the term algos, I'm assuming it means algorithm, like a computer program that helps you trade, right?
Exactly. Yeah.
Okay. So that would really help with your discipline. You tell the computer, do this, and it's not going to sit there and think, well, maybe I could do this. No, it's going to do exactly what you tell it to do.
Well, now you still have the issue of like, you could feel like you want to turn it off sometimes because always taking like too many losses, I'm going to turn it off. So that could be an issue with your mindset too. But again, you got to train yourself to do that well. And you got to kind of look at your overall performance, just well, of course, know the stats on a historical level. And that really helps to kind of stay with it.
Awesome.
Excellent. Etienne, thanks so much for coming on and educating our listeners and really adding value to these people. I'd like you to tell us where people can find out about you, but I'd also like you to kind of help people know where they might be able to learn more of these basic concepts. So where can people find you and where might they be able to learn a little more about this if they're interested?
Yeah. So first, it's my pleasure to be able to help our people get some value with this. And basically, I do a lot now on YouTube, so you can find me on YouTube for sure. Desire to Trade is a YouTube channel there. You can find me there for sure. Or type in my name, Etienne Crete. You'll find me pretty much anywhere there. My site, Desire to Trade, of course, you can find some things there. I have a podcast too, which they can follow if they want. And that's the best way to get in touch with me if they want. So YouTube is probably the best way to learn.
Great. Thanks so much for coming on the show.
My pleasure. It's been fun.
That's it for this episode of Tech Guys Who Invest. This is Adam.
This is Kevin. Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive additional investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Lastly, we would love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com. Thanks, everybody.